everyone, it's the evening of February 24th. Let's take a look at what's been happening in the crypto market. A lot of people have been asking over the past 2 days, with macro conditions easing a bit, the Fed sounding less aggressive, some geopolitical tensions cooling off, we've seen precious metals stabilize or rebound. Bitcoin has also paused around the $60,000 area. Then you zoom out to the weekly chart. Once you pull it back, you'll see price has basically returned to the 2024 consolidation range. So naturally, the question becomes, is this the top, or is this stabilization a bottoming process and a chance to buy the dip? Today, we'll walk through that. We'll also go over Bitcoin, Ethereum, and a few of the market's current hotspots. First question, how deep has this pullback been? Let's measure it. From the high to where we are now, the market has retraced 50%, a full 50% retracement. That's not small. Technically speaking, 50% is already a meaningful correction. There's also an interesting piece of news today. MicroStrategy is now the US stock with the highest short interest ratio. In simple terms, it's the most heavily shorted stock in the US market right now. A lot of people are betting against it. But this is not something to panic about. It's actually logical. During the bull phase, Bitcoin's percentage gains significantly lagged behind MicroStrategy's stock. MicroStrategy has leveraged exposure to Bitcoin, so when Bitcoin rises, its stock often rises more. The same logic applies on the way down. If you want to short the crypto theme through the US equity market, shorting MicroStrategy usually offers more volatility and potentially larger percentage returns than shorting Bitcoin directly. That's just how the structure works. For those who've been following this channel, you know that around the $100,000 area, I started encouraging short exposure. Once we broke below that key $100,000 level, I continued to suggest staying on the short side. And if you're trading US equities rather than spot crypto, shorting MicroStrategy will generally give you a larger profit swing than shorting Bitcoin itself. That's simply due to its amplified sensitivity to Bitcoin's price. So what does a 50% retracement actually mean? Let's zoom out further. In this cycle, if we don't count the absolute bottom and instead measure from around $24,000 up to $120,000, that entire rally, this current pullback has already erased nearly half of it. Nearly half. And that move from 24,000 to 120,000 was the core leg of this bull market. So you can't simply say, okay, we've dropped 50%, we've hit a support zone, now we bounce immediately and resume the uptrend. That's unlikely. Markets don't usually reset that easily after such a large structural retracement. I've also shared this view before. When market-wide risk starts to concentrate, crypto assets, especially Bitcoin, are typically among the first to be sold off. Why? Because they are not yield-generating assets. They don't produce cash flow. They're not income producing. Holding them does not give you passive income. So in times of stress, they become one of the first assets investors are willing to liquidate. Let me share something interesting from the past few days. We attended Consensus in Hong Kong and had conversations with several major figures in the industry. The general tone was quite pessimistic, and the pessimism wasn't just about price. It was deeper than that. Many people were questioning whether this market could eventually be replaced altogether. Here's my personal view. First, this industry will not be replaced. Crypto assets represent decentralization as a core philosophy. And as we move into the era of AI agents, autonomous systems transacting and interacting, crypto assets are likely to become a preferred medium for machine-to-machine transactions, AI-driven payments, and automated settlements. In that context, crypto is structurally aligned with the future rather than being obsolete. Every cycle, when Bitcoin reaches deep drawdowns, you hear the same narrative: it's over, it's finished, it will be replaced. But historically, that kind of sentiment appears when the market is approaching despair. And when the market is closer to despair, your opportunity set actually expands. You cannot make money forever by shorting. Eventually, long-term profits are made on the long side. That's the first key point. Second question, will this industry become institutionalized? In my view, it already has. We are already in the institutional era. A large portion of trading volume is now concentrated in regulated venues like CBO1. Today, we also saw ETF net outflows reach $166 million. That tells you something important. This market is now largely institution-driven. But institutional dominance of the market does not mean institutions control every single token. This market is made up of multiple segments. You have the major tokens, you have altcoins, you have meme coins, you have derivative products and structured assets. It's not realistic to think that everything will suddenly be absorbed or replaced by institutional capital overnight. Another question, will this industry undergo structural change? I believe it will. Right now, mainstream crypto exchanges still charge some of the highest fees across all major asset classes, whether you compare them to equities, forex, or precious metals. Trading rules are also relatively strict and fragmented. Because of that, the trading infrastructure itself is likely to go through a major transformation, especially on the execution and market structure side. Once that transformation happens, it would represent a true reset for the market, almost like a rebirth. But we're not there yet. At this stage, the market is still operating on existing capital. It's the same pool of money rotating around. The losses that were going to happen have largely happened. The forced liquidations that were going to occur have mostly occurred. The major leverage-driven liquidation phase from $120,000 down to $80,000 was essentially the clearing process. What we're seeing now is different. Now it's not about cascading liquidations. It's about a lack of fresh capital inflows. There isn't significant new money entering the system. There isn't strong buying intention. That's the current state of the market. Let's zoom into a smaller time frame and look at the 4-hour chart. The key questions are, can we bottom fish here? Is a rebound likely? For those trading futures, is this a good spot to open long positions? I can state this clearly, at this moment, it is still not appropriate to enter long positions impulsively. Why? Whether it's BTC, ETH, or BNB, during this consolidation phase, the highs are consistently moving lower. The highs are continuously descending. If we zoom out slightly to the 12-hour time frame, you'll notice that during this sequence of lower highs, there are indeed rebounds, but the critical issue is whether any rebound can break above the descending trend line. If we enlarge the chart, you can clearly see the downtrend structure. Each high is lower than the previous one. We do not know whether any given rebound will break that high, and what defines a structural bottom. A bottom is only confirmed when price breaks above the key level that invalidates the downtrend. Until that descending structure is broken, the downtrend remains intact. Right now, we simply do not know when that structural break will occur. So if you insist on trading, you should first define the downtrend clearly. Either draw a descending trend line or visually identify it as I do. As long as price has not broken above that trend line, I would not go long. In fact, once you draw the downtrend line and zoom back into a smaller time frame like the 4-hour chart, if price rallies toward that trend line and shows weakness failing to break through, hesitating, or stalling, what should you do? At that point, you should consider opening short positions. Because based on everything we've analyzed, the market likely has not completed its downside move. Yes, a large rebound could occur and squeeze short positions if risk is poorly managed. However, from a probabilistic standpoint, short positions currently have a higher expected win rate than long positions. This is why stop-loss discipline is critical. If price rallies toward the trend line and shows hesitation, you can place your stop slightly above that resistance level. This allows you to risk a small loss in exchange for a potentially large reward-to-risk ratio. Whether it's ETH or BTC, this is presently the higher probability strategy. Do not assume that a first or second test of the lows automatically signals a reversal. A rebound is possible, but it remains only a possibility. Entering a trade purely based on that possibility is essentially gambling. I understand that a rebound is possible here, but it is only a possibility. If you place an order and open a position purely because something might happen, that is no different from gambling. The fundamental difference between trading and gambling lies in managing probability and risk reward. You must constantly assess your win rate and your payoff ratio. We will share more practical techniques on probability and risk reward management in future sessions. That is simply how markets work. Right now, there is a significant amount of negative news. You've all heard it, reports about Vitalik Buterin selling ETH institutions turning bearish, many KOLs expressing short bias. This is completely normal at this stage of the market cycle. In fact, if people were still aggressively bullish and maintaining strong confidence at this point, that would actually be abnormal. So at times like this, the correct approach is to follow the trend. Looking at BTC, as we previously discussed, the support level is not a single price, it's a range. We mentioned before that this is a very broad support zone, roughly from $70,000 down to $20,000. Even if we define it less extremely, it still spans a $17,000, $18,000 range. That is a very large zone. You cannot assume that once price enters this support range, you should immediately open long positions. The zone is wide and structure still matters. What matters more right now is the trend itself. If you simply draw it out, you will see clearly that this remains a downtrend. We follow the signals given by the trend, and the signal from the trend is clear. Price is still declining. There is no strong or confirmed rebound signal at this point. In previous waves, when rebounds occurred, there were very clear technical signals supporting long positions. That is when we could hold longs with confidence. But here, those signals are absent. Market sentiment is extremely pessimistic. So if the market is in a state of despair, we trade the despair. When the market is hopeful, we trade the hope. There is opportunity in both environments. The key is alignment with structure and probability. You can subscribe to my channel and let's make profits together every day. So that concludes today's crypto market analysis. We will continue tomorrow.